And I always come up on mute. What is my problem? But guys, I'm working on getting a really cool countdown made. It's going to be a custom one, a Freeman walking in, doing all kinds of cool stuff. Guys, thank you for being here. Today is Friday. Happy Friday to every single one of you. We got a lot of big things going on in the market and in the job sector that we're going to talk about today. So if you're here, if you're on X, whether you're on X or YouTube, please do me a favor, share the room. Let's drop some comments. Let me know who's in here today, who's in here every day. We're going to be breaking down exactly everything that you guys need to know and gals for the market heading into the weekend. So you can go into the weekend knowing that you are fully educated on whatever it is happening in financial markets, guys. But I'm extremely happy to be here with every single one of you today. What are we going to be recapping? First, we're going to be looking at the market. A couple of days ago, everyone was hot and heavy. Everything looked good. Nvidia earnings were hot, but everything has sold out since then. But we had something else coming hot, and that's PPI data. And if you don't know what that is, don't worry. I got you. I'm going to let you know what PPI data is, what it means, what inflation looks like, and what that could mean for interest rates coming up. We're also going to break down the big block layoff. Big Daddy Jack Dorsey announced 4,000, over 40% of their employees laid off. So we're going to go over what does that mean for AI, or AI coming after all the jobs, and how I think this could be the resurgence in the American dream. I know it seems weird, but I will explain all of that to you. And then we're going to break down, what does Bitcoin look like? What does Nvidia look like after having amazing earnings, being a company worth over $4.5 trillion, but it's selling off. But why is it selling off? And could we be due for a 20% correction in the stock market? It's quite possible. We're going to get into all of that, guys. I'm happy to announce that we will have this premiering on Monday, the interview with Anthony Pompliano over on YouTube. We'll also get it posted over on X, and I can show you all a couple clips from it. But it was a very good interview. I learned a lot, and I was very appreciative of it. You can see what kids do. You see I got a little gray in my beard, guys. I will never dye this thing. I will never dye my beard, no matter how gray it is. Anthony's actually like 7 or 8 years older than me. And I was like, golly, this guy's got a ton of energy, man. So I've been back in the gym this week. I've been pumping iron. I'm going to, boy, I'm going to be peak Freeman. Just wait. In like 2 months, I'm going to have these big old muscles. You ain't going to be able to even recognize me. But let's get into it, guys. Let's absolutely get into it. Like I said, please share the room, share the live, get as many people in here as possible. This right here is a good lesson. And this is a little sneak peek that I can show you from the live that we had yesterday, or not the live, from the interview that we had yesterday. And it's basically 3 core qualities for an independent investor. And that's what I would consider myself. And I'm somebody that does a lot of studying in the markets. Before I started making content, what I did was I just studied. I consumed content, whether that was on Reddit, whether that's on YouTube, whether that was any form outside of what a financial advisor would tell me. Now, I'm not a financial advisor, and nothing I ever say is financial advice. So this is a perfect segue into telling you to never listen to some random dude on the internet, because I am not not a financial advisor. But there's a lot going on in the market that we want to get into. But Anthony basically says here 3 core qualities for an independent investor. And that's what I fully became whenever I separated from my job, because I used to have a 401k and investment options in that are very limited. Now, I had an IRA, but it didn't have a ton of liquidity in it. However, the 401k did. And whenever I was able to separate from that company, I was able to move those funds to an IRA. So then I had the ability to invest in single stocks, invest in even crypto, via like the IBIT ETF and things like that. And so I want to listen to this. Like I said, this will premiere on Monday, 6 a.m. Central Standard Time. Everyone will be able to see it. But Anthony really came in and dropped a lot of knowledge, I thought, right here in this. So let's take a listen to this. We were trying to do it live. We weren't able to do it live, but that's perfectly okay. We're going to have all the clips and all the content to you guys that you can watch at any time. We'll be premiering Monday at 6 a.m. But let's take a listen to Pomp real quick and see what he had to say.
An independent investor really has 3 core qualities. The first is that they are independent thinkers. So they don't get their news sources from the mainstream media. They're online, they're on X, they're on Instagram, they're listening to podcasts, they're reading newsletters, they're on Reddit, etc. And so by getting that differentiated news source, they are able to think more critically about many of the most important stories of the day. The second thing is,
see, that's every one of us right now, right? We like to listen to podcasts. We like to go on YouTube. We're on X. We're on crypto Twitter. We're on stock Twitter. We're looking at stuff. We knew about the block layoffs that we're about to talk about before anybody else, because we are independent thinkers. And that's what sets us apart from 99% of the world.
is that they want to control their capital and they want to independently invest it. And so they don't trust financial advisors. They don't trust RIAs. They usually say to themselves, I am smarter than those people. I can learn this myself. I have to pay them fees to do it. I want to live and die with the decisions I make. And so if they're thinking independently and they're acting independently, then lastly is they're chasing financial independence. They basically come to the conclusion that they are not going to be successful to their financial goals with just a W-2 income. And so they need to use their personal portfolio to be able to generate enough capital to be able to retire or buy a house or do the things that they want to do in their life. That independent investor really has 3 core qualities.
That's most of us, I think. I think most of us, some people know, some people are completely okay working a W-2 job their whole life and things like that. And that's perfectly fine. That's perfectly fine. Nothing wrong with that at all. But there's some of us that strive for financial freedom in a world that, the reason this comes up is we're currently in a world that everything's more expensive. You know, I just put beef ribs on the grill. And so I'll tell you a little story. A couple weeks ago, I cooked beef ribs for the first time, a big old rack of beef ribs. And I looked up a recipe from it. And the recipe was a guy, Meat Church, great YouTuber about like cooking, barbecue and stuff like that. And he said, this is the cheapest slab of meat you can get. This is the best deal in the world. And this was like 3 or 4 years ago. And it was $7. And I'm sitting here looking at this same slab of ribs and it's $38. You know, I've got 2 kids in school. Every day my wife's saying, oh, this teacher needs money for this. We've got a book fair. We've got a picture day. Oh, today's cowboy day. We need this. It's like everything's going up in value. Everything's expensive. Taxes go up. Home values go up. And that's good or bad. I mean, as somebody that's wanting to buy a home, you do not want home values to go up. But also as somebody that owns a home, and I'm not necessarily wanting to sell that home, I don't necessarily want the prices to go up, because when the price goes up on paper, guess what happens? My taxes go up. And so all of this just eats into all of our liquidity, all of the money, you know. Making, you know, $100,000 now feels like you're barely getting by sometimes in some states. So a lot of people feel like we're pushed down. It's a lot of stuff's against us, and that we aren't able to just work a W-2 job. You know, back when I was growing up, my dad was a truck driver, drove 18-wheelers. My mom was a stay-at-home mother until I was like 13. Now, we weren't rich, you know, and I didn't get a brand new game every time I went to the store or anything like that, but I had everything I needed. I never went hungry, if you can tell. I never went hungry. You know, I always had a loving family. That's how I grew up. And nowadays, it feels like you couldn't do that. You know, you wouldn't be able to survive on that. just because everything has gotten so expensive. We've seen all the money printing going on. We've seen all the inflation. Tell me, if you've went to the supermarket over the last couple of years, I mean, has your bill not doubled? Has your car insurance not doubled? I mean, I seen the other day the average price of a brand new vehicle, 50 something $1,000. Are you serious? Like, what's going on? How are the normal individual supposed to do this? You know, not everyone wants to go to college. Not everyone can afford to go to college. Not everyone has a luxury to go to college. Some people, they get out of high school. If they didn't have to start working in high school, they get out of high school and they have responsibilities. They got to start paying bills. So they got to go to work. And then the people that do go to college, that go to try to get these white collar jobs, now what? They're getting laid off in numbers that are unheard of because of artificial intelligence. So I feel like people trying to become independent investors, and like I said, I am an independent investor. I am not a financial advisor, but I, strive for financial freedom. And that's my goal in being an entrepreneur and everything. And so this will be out on Monday. You can set your reminders for it and everything on YouTube or over on X. I think it'll be something that you'll get a lot of knowledge out of, a lot of insight into a successful entrepreneur such as Mr. Anthony Pompliano. Coming over here to BTC before we get a little deeper into the stream. This is kind of what I'm looking at right now. We wouldn't want it to go much lower. Typically, if this is forming a bull flag, you wouldn't want it to go much lower than 50% at most, 35, 50%. Currently hit the 618 fib level if we were to take a look at that. So it's already getting a little deep into there. Now, that just doesn't mean that it's not something different, right? Maybe it's not a bull flag. Maybe it's, a different wave count or something like that. But what I'm looking for, and I posted this in the Discord earlier, is this yellow line to see if that holds to potentially open up a long in that scenario. So if you happen to be looking for a new exchange, I'm very happy with our stream sponsor, Blowfin. They've been great to me. They've been a great partner of the channel, and I enjoy trading there. So what I do is not what you should do. It's not financial advice, but if you are looking for an exchange, there will be a link down below, and I can also put a QR code up on the screen for y'all. But this is kind of what I'm looking at. And then if we want to break down liquidity levels of what we have to look at for Bitcoin, you can see there's really not that much liquidity underneath. And whenever we look at a price going up or down, they normally don't move in terms of weakness. Meaning if you're at a very, very low, well, what's the catalyst to bring it down? I mean, if Jane Street don't have nothing else to manipulate because they've already been sued, then what's to bring it down? We had a lot of capitulation already. And so we've got to look at where the liquidity sits. And so let's look and break this down. This is over on CoinGlass, very good free website for the most part. And you can see we've taken out pretty much all the liquidity underneath. Now, this is liquidity from longs and shorts. Okay. So as the Bitcoin price, if it goes up, you're going to start seeing a lot more liquidity pockets up underneath from shorts that could potentially be liquidated, longs that could potentially be liquidated. But you can kind of see, if we kind of break this down, where we're at, where the liquidity sits up above, we've got a pretty decent pocket right here at 75K. And I think that would be my target on a trade. I would not be personally trying to ride this all the way up to this liquidity pocket. Could it make it there? Sure. Anything could happen, right? Absolutely anything could happen. But that's you're asking for a lot of strength at a time that I think the stock market may roll over a little bit. And I want to get into that in a minute and get into the whys of that. But we will definitely come back to BTC in just a minute. But first, I want to break down what data came out this morning for us. We had PPI data came out this morning. In 2 weeks, we will get CPI, the consumer price index. But basically, you can see it was expected to come in, core was expected to come in at 3, and it came in at 3.6. And this is why it's so important to have notifications on over on X. I'll make sure to always keep you updated as soon as anything comes out. And I don't like to just post the data. That's easy. You know, I can get it from the website, copy and paste it over here. But I like to do a deep dive into the data and see what changed, why the numbers have moved, and what it means for us. And so month over month, it was expected at 0.3 and it's up from 0.8. Okay. Headline year over year, 2.6, it's 2.9. And so why? Okay. Services inflation surged. So the cost of services. Wholesale and retail margins jumped, meaning they're making more, but they're charging more. And so maybe they're starting to pass the price on from tariffs. Initially, we've seen that, you know, they were kind of eating the cost, whether it was the importers or it was the stores such as Costco. But maybe they're not able to do that for so long. Maybe their bottom line's getting a little thin. And so it looks like they're starting to pass these on. Transportation cost rose. And this surprised me. And the reason it surprised me is because we've seen gasoline and oil prices down. But again, we have seen over the last few months a lot of global tensions. And whenever you see global tensions, you tend to see oil prices rise. And, you know, even though it's a global industry and the United States does have energy independence, it still affects prices, you know, globally around the world. And when we're receiving goods and services from overseas or material from overseas, then that does it. So like I said, energy prices fell, but services cost kept PPI high. And so maybe these are being passed on to the consumer. But what does that matter? What does that matter? And what it matters for us is because when we have the outlook of the Federal Reserve cutting interest rates, you know, higher inflation will not let them cut interest rates. The Federal Reserve has a dual mandate, and it's in this order, and don't let anybody tell you differently. The number one concern for the Federal Reserve is to keep inflation around 2%. Okay. Currently, it's higher than that if we look at CPI data. If we go look at trueflation, which we can look at in a little bit, it was under 1%. Now it's ticked up to 1.3%. However, the number two demand for the Federal Reserve is unemployment. You want to keep a good employment level. You don't want too much unemployment, right? If people don't have jobs, they can't buy stuff. If people can't buy stuff, they can't pay their mortgage. They can't pay their car note. Things start being repossessed. Foreclosures happen. But the reason I say that, the order, because it is so true. Because if the Federal Reserve is going to get into this scenario to where we have high inflation and we start seeing these artificial intelligence job losses and unemployment goes up, well, they've got to pick one. And they will always pick inflation over unemployment. But because a recession resets an economy, and runaway inflation absolutely destroys a currency. Take a look at Venezuela. Take a look at any countries that have had runaway inflation. And so if we have both of them and the Fed has to pick between one or the other, they're going to let a recession happen and they're going to crush the inflation. And so it's something as investors we definitely have to keep an eye on whenever we start looking at, you know, what the Federal Reserve is going to do. Now we know Kevin Warsh is going to be the new Fed Reserve here in a couple months. In the middle of May, Jerome Powell's tenure is over, and President Donald Trump has selected Kevin Warsh. Now, he will still have to be confirmed through Congress. However, he is somebody that wants lower interest rates, but at the same time, he wants a lower balance sheet. So it's going to be very interesting to see how all of this played out. But the market is reacting to this a little bit because of what I just told you. Odds are we will not get a rate cut. And we can go look at the Fed rate cut tool and look. D-Pin Connection right here said long metal, short crypto. I said a little funny joke you can read if you want. All right, man, we got a lot of people in it. Cool. Hi from India. Hello, man. Nice to see you. Thank you for joining us. If there's any stocks or any crypto that you want us to take a deep dive into, let me know, please. But that's what the market's reacting to right now. And so let's go to Fed watch interest rate odds. And we'll come here and see what the odds are right now. And so this is on March 18th for the rate cut. And you can see we are currently at 350 to 375 basis points as the interest rate. And so a lot of people say, well, what is this? Because whenever I look at the bank, they're wanting to charge me 5.5%, 6%. Credit cards are 20%. The federal funds rate is basically the overnight rate that banks lend to one another. And so if they're lending at 3.5%, the same way that if you bought this bottle of water for $1, you couldn't turn around and sell it for $1. You would have to make a markup on it, right? So maybe you sell it for $1.80. Maybe you sell it for $2. The same with interest rates. That is the price that the bank is getting it at. And so you can see that we've changed even just with this new data, that it went from a 95% rate cut to now it's actually a little better. And I wonder if that has to do with the layoffs that we've seen announced just last night. And I want to do a deep dive into that because I think it's very interesting. If we come over here, so there's going to be a meeting in April, and this is the last meeting that Jerome Powell will be the Fed chair for. And you can see it's still a 76% chance that there's no cut. And then when we come over here and we look at June, which if confirmed, this would be the first meeting that really Kevin Warsh is calling the shots. And you can see now it's a 46% chance that there's no cut and a 44% chance that there is a 25% basis point cut or 0.25%. And there's a 10% chance that it's a 50 basis point cut or 0.5%. And so this is something that I'm wanting to watch very closely because we know Trump wouldn't have appointed him if he didn't agree or say that he wanted to cut interest rates pretty quick. But we got to keep a look at inflation and everything, but you could see that this odds for a 50 basis point cut went from 6.7% right here, went from 6.7% right here to 9.5%. So this is something I want to take a look at. It's almost a toss-up between these two, between no cut and a quarter point cut. And then we got a 10% chance that we will be getting half a point cut by that time. So all eyes on that. But I do want to transition to something that could push the markets and really push the Fed. Jack, the CEO of Blocks, which is the company behind Cash App and Square. Whenever you go to the store, you go to the supermarket, and that person puts that little thing in their phone, and they're like, tap here, swipe here. That's Square. These are payment processors. And he made a very big announcement yesterday that kind of caught the world by storm because it's the first massive layoff done in the name of artificial intelligence. And so let's break this down. Jack said, and remember, he was also the founder of Twitter before it was sold to Elon Musk. We're making Blocks smaller today. Here's my note to the company. Today, we're making one of the hardest decisions in the history of our company, reducing our organization by nearly half, from over 10,000 people to just under 6,000 people. That means over 4,000 of you are being asked to leave or entering into consultation. I'll be straight about what's happening, why, and what it means for everyone. First off, if you're one of the people affected, you'll receive your salary for 20 weeks plus 1 week per year of tenure. So if you'd work for the company for 10 years, you would get a 30-week severance package. Equity vested through the end of May, 6 months of healthcare, your corporate devices, and $5,000 to put towards whatever you need to help you in this transition. I want you to know that before anything else, everyone will be notified whether you're being asked to leave, entering consultation, or asked to stay. And so I just want to say, It's a pretty good severance package. I received a severance package whenever I separated from my company. I was wanting to go full-time content and everything like that. They were offering severance packages. I raised my hand for it. It was not this good, though. It did not have any base weeks plus weeks per tenured. What it had was a couple weeks per year of service, essentially. And then I ended up having healthcare option for 18 months, which was a very big thing for my family. A lot of y'all know I have a son, nonverbal with autism. So got healthcare needs that I'm responsible for. So, but I just want to say this is a very good severance package overall. So kudos to him for doing that. We're not making this decision because we're in trouble, but I want to talk about that. I want to come back and talk about this. We're not making this because we're in trouble. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving. But something has changed. We're already seeing that the intelligence tools we're creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company. And that's accelerating rapidly. One thing, this guy used horrible punctuation. Imagine getting laid off and the guy doesn't even use a capital letter in the entire email. What? Come on, you can't even use proper punctuation when you're canning somebody. You know, he said he had two options: cut gradually over months or years as this shift of artificial intelligence and automation plays out, or be honest about where we are and act on it now. I choose the latter. Repeated rounds of cuts are destructive to morale, to focus, and I agree with that. If you're just chipping away slowly, people are like, oh wow, I didn't get laid off this round, and then they're just sitting there biting their fingers, and they're waiting for the next round of layoffs to come and all of that. So I understand this, but the way that the market reacted is what has people for concern. Now, don't get me wrong. The stock is down, and we can take a look at that, in a little bit. But if we take a look at the time this email went out yesterday, the stock jumped up 25%. So what does that tell you is going to happen with other companies that are in trouble? Maybe they're not, I know Block said they're not in trouble, but let's just say a company is in trouble and they come out there and they need to do a big layoff anyways because they're in trouble. And when you're in trouble, you got to cut labor, you got to cut costs to get that bottom line up. And so what if they come out and say, hey, we're not in trouble, but in the name of automation and artificial intelligence, we're cutting 25% of the workforce. And next thing you know, their stock jumps up and shareholders are happy, Or what about the AI companies that are using AI heavily in their businesses? And then they look at things and they say, you know what? They did it, and that's what happened to their stock price. And you know what? Maybe we don't need these 10% of people. Maybe there is a little fat on there. Let's cut them. We're getting a big boost in the shares. We got quarters about to end in a month, things like that. And so it's going to be interesting to see what other companies do this and how this all plays out. And so last night I woke up at 1 a.m. My son was sick, and I did a lot of research on this. And I made this article and I came up with this thesis about what has happened to America, what has happened to our way of employment and our way of, how we have historically been a dominant superpower in manufacturing and how that fell off. So I made this article, and I'd appreciate it if you would read it on your own and share it. But I do want to go over it with you. And it's AI Saves America. And it's kind of a weird, oxymoron when you first look at it. But what I want to go over is, you can see layoffs right here, and then you can see this emerging of the American dream. And so shout out to ChatGPT for depicting that very good for me. But I spent from like 1 a.m. to 4 a.m. writing this. Block's AI layoffs are brutal, how they could save America. And it goes through what we just went over about how Block laid off a lot of people and then how the stock jumped up. 25% is what it jumped up, right? $2 after hours, $12 after, or $2 after the announcement. And then after hours is when he shared it on Twitter. And then it jumped up 20%, you know. Why this feels worse than it is. And this is truth about what has happened in America. You know, for decades, large parts of the US economy were built on white collar comfort, laptop work, endless meetings and meetings that could have been emails. Like I've been here. I've been there. You know, I was engineering at the later part of my career whenever I had a job or worked for somebody else. You know, reports and approvals, coordination layers. There's all these teams. There's the fun team. There's this team. There's, you know, all this stuff, all this fluff, you know, that could be cut out of all of these companies. But the problem is that these tech companies, these Silicon Valley companies, they've been able to be propped up with high P to E ratios that if they were spending 20% too much on labor, oh, well, it was okay because the valuation supported it. You know, if you look at all the very, very crazy P to E, price to earnings ratio, in the stock market for tech companies, you know, they've been able to afford it. And so AI is not just taking jobs. What artificial intelligence is doing is it's finding inefficiencies and it's finding that fluff, and that fluff is getting cut out. Now, I know you might be saying, Freeman, I thought you said this might save America. Stay with me. Stay with me. Okay. A lot of these jobs weren't meaningful output creators, and that's where AI is hitting first. If a task is entirely digital, repetitive, or about to move information around, AI can do that faster and cheaper. The layoffs you're seeing, this is a rebalancing of efficiency and production. But production shocks historically do not destroy jobs in an entirety as a whole when you look at number of jobs. This often is the fear, such as when computers were created. However, the marketplace tends to reallocate them. So let me break this down. When computers first went mainstream, you would walk into a place and there'd be a couple secretaries and there'd be a whole bunch of people pushing paper and doing that kind of job. Well, then computers came out and people thought, oh, wow, we got Excel spreadsheets now. What's going to happen to all the people that are keeping track of the records and the papers and all of that? Well, those jobs, some of them did go away in the name of efficiency, because then there was computers and one person could do what four people used to do, and record keeping became a lot easier. But then what happened? The technology of computers created this whole industry of white collar work. And so jobs were created on top of that. And so what I want to get into is how this could potentially save us and change the trajectory of where America has went, you know, because throughout this whole white collar initiative, America didn't just lose jobs. It lost the builder identity that I feel we were founded on, you know. And here's some statistics I was able to pull up. In 1979, manufacturing employment in the United States was at roughly 19.6 million workers. The U.S. was a manufacturing superpower. Remember, we made the internal combustion engine. You know, Detroit City used to be Motor City back when the Model T was first made a long time ago. You know, now look at Detroit, Michigan. What's it look like? So it looks like a poverty town, you know, poverty city. So at that time, manufacturing was 22% of all jobs, which means over 1 in 5 workers worked in some type of manufacturing facility. Okay, today, even though employment has grown significantly, and so that right there tells you technology does not destroy jobs as a whole number. But even though jobs total have grown entirely, manufacturing jobs have shrunk to only 12 or 13 million. So we've gained a lot of jobs as a whole, but the overall, you know, 19.6 million workers in 79 to now 12 or 13 million workers today, which is only 8 or 9% of the workforce. So you can see this transformation right here. 1979, there was about 20 million jobs. And today, there's 12 or 13 million jobs in manufacturing. And so a lot of people don't understand why this matters, you know. But now if you look, nothing's made in America anymore. America has become a seller of services for the most part. Now, yes, there's still manufacturing in America. Don't get me wrong. But if you look, I mean, if you just grab absolutely anything, like let me grab this thing on my desk and see where this thing's made. Made in China. I don't know if you can see that. Let me see if I can. Yeah, I think it's going to be too dark. You can't see that. Okay, let me look at this remote right here. Okay, made in China. Okay, let me look at, anything on my desk. Let me look at this remote. Where's it made? Made in China. Okay, so the odds are majority of stuff in your household was not made in America. And obviously I'm from America, and so that's my outlook on everything. And so China just didn't stumble into this dominance. I mean, it was smart by them. Like the Chinese government, the Chinese economy, President Xi Jinping, very smart, right? So today, China is about 29% of global manufacturing. And so the result is that we don't make any more here. These jobs back here are gone for the most part. Now there is a reshoring effort now that we will get into in a little bit, but America pushed software and not hammers, and so I say this: Detroit was once Motor City, fell in decline, and when you look at this, the trade deficit tells the story. And a lot of people say, well, of course we have a trade deficit. We are the wealthiest country in the world, so obviously we buy more stuff. But you can't just look at it in terms of that, in my opinion. The U.S. ran a goods deficit of more than $1 trillion in 2025, meaning that the country imported far more physical products. Now, when everything's hunky-dory, sure, who cares, right? If we can sell software to people or sell this services, or I can sell a Discord to something, or I could trade Bitcoin, who cares, right? But what if there's a supply chain problem? What if, and I pray it never happens, but there is like a global conflict or something like that, or what we seen 4 years ago, during the illness, when things are hard to move around, you become dependent. I think nations should be self-sufficient, kind of like I would love to be able to live off grid. I would love to be able to have a garden. I would love to be able to have, a few cattle and things like that, water well, solar panels, something like that to be self-sufficient. That's important, I think, and then also, if we're just being completely honest, I see these pictures of Dubai. I've been to Moscow. I've been to Paris. Now, obviously, these are huge cities, right? And all these places, they try to make their big cities look good. But where I live, I don't live super in the country, but I also don't live super in the city. But it's not like the roads are kept up with a lot. It looks kind of like we stopped updating things 30 years ago. And so, what I say right here is that we didn't stop building. We just underbuilt, because there is construction jobs still and things like that, but it shows. And so I shared some of my personal experiences of going to different countries, but after all, I don't blame people. Why would you want to go be a welder and have to sweat and have to work, when you could go get a $60,000 student loan, which is most of the time backed by the government, which means it's backed by who? The taxpayer, because nothing's for free. And you go get a fun job in Silicon Valley, because those jobs look super fun. You see people posting, they go drink free kombucha, and then, they have to pick between 8 different flavors of quinoa at lunchtime. And most of the time these lunches are free because these tech companies with these big P to E ratios pay for it. I don't blame them. But this is the part that I'm transitioning to, of how I think this will lead to a reshoring of jobs in the United States, and how this could potentially save the country in terms of being self-sufficient. Because, AI, for one, is not just software. That's what the end user does, but it's steel, it's concrete, it's power. And so there's all these jobs that are very high paying jobs. My cousin's working at Tesla, making like $55 an hour doing pipe fitting for him. I mean, there is a lot of jobs that are created around all of this tech. Now, that will run out eventually, because once the data centers are formed and everything, then, unless you're building a lot, which right now we're in like the .com bubble part of the AI, but there's a lot of jobs for a long time, right? Land, steel, electrical power, cooling systems, fiber, skilled technicians, so you can automate spreadsheets, but we're not to the point of these robots everywhere yet, like Tesla wants to do. That's going to be a long ways out. Like I see, if you watch the stream every day, I tell you, if you work with these, you're safe. You're safe for a long time, at least in our lifetimes, in my personal opinion. You can't automate, pouring concrete, updating power lines, installing substations, welding heavy machinery, any of that, and data center construction's at an all-time high. That means jobs, but in sectors that are harder to automate, And so what jobs are really coming back looks like, in my opinion, like I said, all this is my opinion, guys. It's not going to be assembly lines like we had back in, Detroit City, but people are going to have to find jobs. There's a lot of people that are seniors right now, juniors, or that maybe they're just going into college. They get accepted to this college they're so happy about. They're going to spend, 60, 40, 100K to go to school for something. And now they're thinking, is anybody going to hire me to code? Is anybody, with AI, it's changing the game. It's changing the landscape on everything. And so what's going to be in demand is skilled trades, technicians, plumbers, welders, electricians, power grid, industrial maintenance. All of that is going to be in high demand. It's still in high demand. That's why these jobs pay so well. They pay very, very well. There's already been over $2 trillion in announced corporate investments commitments tied to reshoring and domestic manufacturing expansion. And I told a little story about myself. When I was 18, I didn't have the luxury of going to college. I had to get married, and I was an entry-level pipe fitter at that time. So obviously I wasn't making six figures initially, but with a little bit of overtime and some experience and stuff like that, I could. And then at my last job, when I went in and I was what's called like an analyzer technician originally, I learned a craft, and that was a six-figure job, and then I went to school for the engineering and all that stuff. But the fact is, if you can use these, and I'm not talking about using these to flip burgers, and there's nothing against anyone that flips burgers, but if you do something that requires this knowledge, skill set, brain with these, then you can make a really good living. You can make a really good living for your family. And like I said here, these jobs didn't come with free kombucha. You know what I mean? I wasn't eating, different flavors of quinoa at lunch. But, I felt good after a day of work, walking into my family, giving them a hug, maybe hands a little dirty, maybe legs a little sore, been climbing some ladders and stuff, but it's an honest day's work, and I feel like a lot of that's left. A lot of that's left the country. And so that was kind of my thesis behind this. I know this is kind of different than what I normally talk about and stuff, but I just want y'all to get to know me, and I want to be real with everyone. And, so the block layoff, it's an ugly, ugly, lesson. It's a ugly truth, but it is a truth. We've been saying for a long time, oh, AI is going to replace all these jobs. And then it actually happens. And we're like, what? What? We were right. What are you talking about? And so AI is going to eliminate, maybe let's say 20% of these white collar jobs, 30%, over time, it'll be a little more. Now it's not going to automate everything. You got to have people to oversee it. You've still got to have people to do complex stuff at a minimum or at a maximum right now in like the next 10 years. It's going to make things efficient. If you had 10 people on a team, maybe you only need 6 now. Maybe you only need 7. And, because the AI is able to streamline everything a lot. But those people going to have to come back to work. They're going to have to go to work. People that are maybe juniors or seniors in high school right now, they're seeing this. Their parents hopefully are seeing this and saying, you know what? I heard Freeman talk about being a tradesman and going to work and things like that. And you know what? Most of these jobs, being a plumber, doing all this, being an electrician, I've got a buddy of mine that doesn't have the best record. Like, with the law and stuff. A very good guy, but just had some problems. And he was still able to go become a journeyman lineman. And now he runs a crew and he probably pulls in 200K a year. That's very good. I know some people in crypto, they get all this, they see these people, turning a couple grand into, millions or whatever. But guys, we got to be realistic here. Like that's a very small subset of people. There's a lot more stories about people that started with 3 grand and ended with 0. And then, we're very upset about it. And so we've got to be realistic about everything. But I think we're going to see a big push for young kids, for people, young adults that are coming out of school, and they're going to want to get into some of these crafts. And yeah, we're still going to need doctors. We're still going to need surgeons. We're still going to need all these techs. And that's where I think we will see this transition from a place that years ago we did a lot of manufacturing. And I'm not saying this thing's coming back to being made in America, but what I do think we will see is a lot more people being in crafts and things like that. So I'm interested. Let me know what you do for a living down in the comments if you don't mind. I would really like to know what y'all do. I think it's very, very interesting. And so now I want to pivot a little bit. I want to stay on this topic, but this is Eric Jackson. He's somebody I have a lot of respect for in the finance round and in the financial realm. And he talked about here a little bit about the Block, what they announced. He said Block didn't announce layoffs. It announced a new operating system, intelligence, focus, and speed. Here are the only 2 signals that matter. And so let's listen to this for a second. Eric Jackson is the one who originally called Carvana. He had the thesis behind Open, and I like Open Door a lot. And so let's take a listen to this real quick while I get a little bit of water, and then we're going to move into how this could shape the upcoming stock correction that could be coming, and how I'm preparing for that.
Good morning, guys. It's early morning. My 17-year-old marketing manager has a big trip today, so that's why the dogs and I are up early. But the work continues, and we got some big news to cover this morning, and that's that Block didn't just announce layoffs yesterday. It announced a new operating system to the world based off of what's going on in AI. And everyone saw the headline. Jack Dorsey fired 40% of the staff of Block yesterday after earnings, just after market close. But that's not the headline that I heard on the call. I heard something much more important. He described how the company is going to run from here on out in 3 words of AI. It's going to re-rate because it becomes a smaller machine with risk.
So what he's about to talk about is the efficiencies, and how the most important thing is not cost, because Jack Dorsey said that cost wasn't a thing, but it's how much output per engineer can you do and how quick can you ship these products to people.
Controls. Those are the real operating loops for Block. And if those loops keep compounding while the costs shrink for the company, the stock doesn't re-rate because of AI. It's going to re-rate because it becomes a smaller machine with the same growth. And here's the part that almost nobody's talking about. Jack said that they're moving toward a model where the customers build features on top of Block's capabilities. That's not incremental. That's shifting Block from software company to a capabilities company. Just think about that. If the customers can compose what they need, internal headcount matters a lot less than it has for the last 15 years. And that's the whole point of what he did yesterday. So in 2026, don't buy the AI story. Buy the AI operating model, but only when you can see it in the velocity and in the margins. Block told you what they think the model is, and now we watch to see whether they can execute it. It's day 192. Make it a good one.
So that's day 182 of talking about Open Door, and he does these every day. Now, if we come over here and we take a look at Jack's X, there is a little bit of cloudiness, I would say, because a lot of people said, well, Jack, you're not just laying these people off because of overall artificial intelligence. If you look at this post right here, it says in 3 years from December 2019 to December 2022, Block more than tripled its headcount from 3,900 to 12,500, unwinding less than half an insane overhiring binge has much more to do with Jack Dorsey's managerial incompetence than whether AI is going to take your job. So I think a lot of people are worried, and it's kind of interesting to me why he wouldn't come out and just say this. You know, I think the reason he wouldn't just come out and say this, and right here he did. Yes, we overhired because I incorrectly built 2 separate company structures, Square and Cash App. But why wouldn't he just come out and say, hey, we overhired. We realized we don't need all y'all, or maybe we did need y'all and now we don't. Why wouldn't he say it? And that's why earlier in this conversation, I said, I don't know if I'm sold on the fact that they're doing great, you know? And so it's interesting. I've seen Pompliano had a take on that as well. If we come over here, he had a really good take on it. Right here talking about Jack Dorsey. I really recommend all y'all going to watch that. But let's get into the markets now. Where are you from? I am from Island of Man. I've never heard of that. I think I'm the only one on my island that bought Kaspa. What is this? Holy cow, dude. I want to come on vacation. Where do you live on this island? Mauritius? Is that, am I saying it right? Mauritius? A volcanic island nation in the Indian Ocean, located east of Madagascar. Okay. Known for its stunning white sand beaches, coral. Man, how much can I go on a vacation there for? Golly, guys, look at this. Holy, dude, is it this beautiful in person? Or is this just like whenever, you know, you're dating a girl and she's like all makeup, she's all nice and everything. Oh, hey, yeah. And then you marry her and it's like, you know, is that what this is? Like, is this just the edge picture, or is it really this beautiful? I would like to know. It's golly, this looks like paradise. This absolutely looks like paradise. 1,000 for 1 week. Dang, man, that's good. Heck yeah, I'll come. Look, that's me right there. Me, my wife, a little kid. I got 2 kids, but golly, I could stay here. Wow, that's beautiful. You were born and raised there? Look at those fish. You can see right through that water. You ever have volcanoes erupt? Are there like live volcanoes on the island? Golly, that place looks beautiful. Man, what did I get us into? Man, I don't care about any of that. I'm just trying to see. Wow, look at that. Let me know if you're in this video, man. Yes, lots of tourist attraction. The whole country isn't that paradise looking, but we have nice views. No, only one dormant volcano. How's the crime rate? Is it good? Is it safe place? Man, I would like to come there especially if I could pack up all my stuff. Maybe I'll be live streaming from Mauritius in a few months. over summertime. Man, beautiful. I hope you enjoy life and everything, man. I hope it's great. I really do. I hope it's wonderful for you. Let's go into the market. Let's break down the market, stock and crypto market. Wow. So like I said, just to recap for anybody that's just coming in, we had PPI data come out this morning hot, which translates to high inflation. How does that matter to us? High inflation means that it's harder for the Federal Reserve to cut interest rates. On the other side, we just seen Jack Dorsey announce huge layoffs. Now it's 4,000 jobs. It's not a crazy number of jobs from a macro perspective, but it's nearly 50% of an S&P 500 company. And so if this starts a domino effect, a cascade effect, you could see how that could really lead to high unemployment. And so if we have high unemployment and we have high inflation, the Fed's got to knock down that inflation. Even if it raises the unemployment, they don't care about that. The Fed's dual mandate is number one, low inflation. Number two, jobs. In that order. Remember it. Don't let anybody tell you differently. And so let's break down the stocks. And so we see that Nvidia is what we were all waiting for. We were talking about it on this stream last a couple days ago. You know, it rallied into earnings and it even hit over $200 in after hours, or it's back here. Let's see. What's the date? No, it's the 4 hour. Let's go to the daily. And so it rallied up here. I'm pretty sure it hit over $200 in after hours. This isn't showing after hours. But since then, Nvidia beat earnings, very good earnings, down 10%. That's a lot. It's a $4.7 trillion company, right? This is the company that is leading the AI revolution, the number one chip manufacturer. You can see market capitalization, 4.34%. You can see that right there. And so now I want to go to, and this is a Stockwell, very good video. And I want to watch a little bit about what he says because I agree with this. And I'm not the only one thinking this. And the thing comes from where if we get a drop in the stock market, does that fall into crypto? Or here's my thesis. My thesis is that crypto is the predictor of all. Crypto is the most risk on of risk on assets. And because of that, it feels the pain first, whether that's tight liquidity that we know right now we're at peak liquidity tightening with the Federal Reserve just ending quantitative tightening a couple months ago. They have not started quantitative easing, but they ended quantitative tightening. And so we're at peak tight liquidity and we see Bitcoin dropping. We see crypto dropping when everything else is hitting all-time highs. So my theory is that crypto is the great predictor of all, that since it is the most risk on and most liquidity sensitive, that Bitcoin feels the pain first, but Bitcoin also gets over the pain earliest. Now, I don't think we're done totally macro-wise. I think we still have a little bit low to go. I still think we bottom in October, but that doesn't mean that we don't get rallies in between. And if you're just joining here, I'm not a financial advisor, so don't listen to me at all because I could be completely wrong. But because we could just go straight down. But it doesn't mean that we don't get, you know, a little bit of relief. So for BTC, what I'm looking at here is this yellow line. It makes a lot of sense if we take a look at it. Right here, it was resistance. Right here, we can call it resistance. Right here, it was support. But the big level that BTC would have to get over is about 73K. And the reason we have to get over 73K is because if we go to last cycle around 73K, this level right here, let's go to all those touch points, touch point, 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 touch point. You can see this level between 69 and this top right here of 73K, that's the last cycle's broad all-time high, right? The biggest touch point area. And so that's the big level to get over. And so I'm wanting to see, we had a very strong move the other day. I wouldn't want it to drop underneath this level right here. Definitely not under the 786 fib level, but it's currently tagged the 618 level. So it could stay there, and I might potentially open along here because I could have a pretty tight stop loss. You know what I mean? I could have a pretty tight stop loss. Like I said, just because I'm doing something doesn't mean you should do it. But, I could have a pretty tight stop loss. Like if I did 64,750, that's good risk reward. Even if it just went to 70, that's a 1-to-7, 1-to-6 risk to reward ratio. Minimum, I do 1-to-5 risk to reward ratio. And so I'm going to watch this a little bit. Like I said, if you are ever looking for an exchange or anything, Blowfin is the official partner sponsor of the Finance Freeman live streams where I do all my trading. And so there will be a link down below if you want to join. Would love to have you. 1.3 million population. Wow, that's pretty crazy over there. Yeah. I understand AI companies like OpenAI are willing to be monetized. What do you mean by that? Like ads or something? I mean, they're going to have revenue. They're kind of struggling a little bit. But and I can elaborate on that if you want. But yeah, we kind of got a lower high. Why not? I'm going to try it. Okay. So I want to go look at the rest of the market right now and see how everything's looking. So I want to look at this video right here and this Stockwell, this page right here. What is it? 115K followers. So I'm kind of new to their page, but I like what he's saying. I like the overall thesis of what he says. He says the markets and SPY. He says will, and I don't ever like to say certains because there's no certainty in anything. There's certainty in a few things: death, taxes, and wife's always right. Or if you want to have a happy life, she is. The market SPY will drop 14 to 17% very soon. He said this does not mean you should get out of everything. However, it doesn't mean you should position yourself. So let's take a listen.
Now, when this happens, guys, this is typically in a late cycle. This is typically where the S&P 500. Hey, Wales, good morning. I want to go over the markets for today. And I want to first warn you guys that we are getting pretty mature in its cycle for the overall markets. There's a few reasons why, right? The first reason is that a lot of tech stocks like Nvidia, Tesla, whatever the case is, they're starting to top out a little bit, right? They're starting to move sideways. And during this consolidation period, you're starting to see rotations of other stocks that are bottoming out, that have been flat, starting to make some late cycle runs, okay? Now, when this happens, guys, this is typically in a late cycle. This is typically where the S&P 500 is in a late cycle. It starts to move consolidation sideways.
What he's talking about here is that the main, the SPY, the Qs, the NASDAQ, those have been, like if you look at Nvidia right here, right? If we come over here and we look at the Qs, you could see we're just kind of trending in this. You see, I've got this pattern drawn, and waiting to see if we break underneath that. However, if we come over here and we look at something like one of my favorites, Circle, which I know I've talked about it a lot on here. And I reached out and asked them to list it, and they did because I'm extremely bullish on it. And you can see it was all the way down here. This stock was it IPO'd at $31. It went to 300, and then it went down to the 786 fib level perfectly of like $55, $56. And then this is the company behind Circle, the stable coin, and it had good earnings, and boom, 43%. And I got some around $60. I didn't get in way down here, but I bought on 60 on the way down. Never financial advice. But, So he's starting to say some of these stocks that are kind of looking bottomed are starting to go when the top ones are starting to roll. So liquidity is moving. And what I always like to say is there's always a bull market somewhere. Like liquidity does not just go away. You know what I mean? It's not like people sell the stocks and then they go get a shovel and they bury the money in the backyard. Like, no, liquidity goes somewhere, because if not, inflation's going to eat it, right? We've got inflation right now of, 3%. So people, they want to put these large funds want to put their assets somewhere. And so if we look at something like the Qs, it's it might be rolling. We have this double top right here, very, very big level to look at, of 637. And this guy's expecting exactly how to survive until October of 2026, which is about another 6 or 7 months. What's interesting about this is if we take a look at BTC right here, and we know that historically a bear market in BTC lasts about 12 months. You can see that was October of 2025. If you want to say that this was the high because we barely made another one, that's October of this year, right? So anywhere between October and, anywhere between October and let's say, a couple months before that would be like a historic bear market in crypto. And if he's right on this, that, stocks, the SPY, the Qs and stuff would rebound around then. And what also correlates with that is that we know the Federal Reserve, we have a new Fed chair coming in May, and he's probably going to cut interest rates. And so if he cuts interest rates, it'll take, 4, 5, 6 months for liquidity to flow through. But you could see the odds are that in October, the timing that Stockwell's is predicting a bottom, that a historic Bitcoin bear market would be in, that statistically, if we take a look right here, the odds are we're going to be at 300 to 325 basis points. That's 3 to 3.25% Fed fund interest rate. Where we're currently at is right here. So that's a half a point lower. And there's a 23% chance, so almost 25% chance that we're going to be 75 basis points lower or 0.75% lower. So very interesting. Very, very, interesting to see how it could potentially play out. But all of this is kind of correlating with one another. And but there is things like this right here. If we come over here and we take a look at, this is the Jack Dorsey stock that we were looking at just a second ago. If we take a look at this, let's go on the daily. You can see it's down. It was down 83%. At one point, if we go to the low right there, it was down 86%. It's still down 76%, even after the big 40% pump yesterday, right? And so he's right in saying that we are at a point that looks like a transition in the market, that we could be potentially rolling over here. I went very heavy cash in my IRA, essentially all cash, like treasury bills right back here. Like I think I did it like right here. No, I did it at the end of last year. So yeah, I think it was like beginning of December. So like somewhere right in here, right? So it went up. At one point I would have been up. So I was like down from doing it. So this makes sense that this was the point I did it. But now from that point, we're essentially, 4% lower. If we get a drop of, say, what Stockwell's is saying, 14 to 17%, if we take a look at that, if we were to drop 14, that takes us down here. 17 takes us down right here. And I've looked at this level a lot because it's a couple reasons. One, 500 is a psychological level, right? Half a thousand is round number, all that. Psychological levels don't mean as much in large market cap projects or companies as it does in crypto, and it's like 5 million market cap, but another reason this level makes a lot of sense is because of all the touch points, you know. And like I say, sometimes you don't have to overcomplicate technical analysis. You have resistance, you have resistance, you have support, you have support, you have support. You broke out, you broke through, you have support, and you know, so that right there. So if I did that move right there, then that would be, you know, 20% savings essentially. Now, like I said, what I'm doing is not what you should do. It's not financial advice, but I do fall into this category of what Mr. Pompliano said on the stream yesterday of, you know, being an independent investor because of these things. I'm an independent thinker. I like to control my own capital, and I chase financial independence, guys. So, like, if you're just now coming into the stream, the Anthony Pompliano interview will be on Monday at 6 a.m. Central Standard Time. We will release it. We'll be posting a few clips throughout the time, you know, leading up to it and stuff. But it was a wonderful conversation that I had with him. And so I'm wanting to see what happens with BTC. We might go lower, might go higher. I still don't think the low is in for this cycle. As I said, I still think the 200-week simple moving average is sitting around 57K. The trend line that has been intact since $1,600 is sitting at around 57, 58K. And, you know, all these macro events correlating with the stocks potentially rolling over, liquidity at all-time tightness right now, and probably going to be flowing in, you know, coming mid-May whenever the new Fed chair comes. The first meeting for the Federal Reserve, the first FOMC meeting with the new Fed chair is going to be in June. And so let's give 3 or 4 or 5 months for liquidity to really sweep into there. But I do think things like Bitcoin are the predictor of all. You know what I mean? I think that we've got the tightest liquidity here. Okay. The tightest liquidity into crypto. And that's what feels the pain first. And that's my thesis. And I'm rolling with it. I think that we should all form our own thesis. Going back to this, independent thinkers, you know, consume a lot of content, consume a lot of resource, a lot of data, and come up with your own thesis. You're extremely smart. If you're sitting here watching this, whether you're on lunch break, whether you're at home, whether your boss is in the other room, whatever you're doing, if you're driving, you know, you're spending this time trying to improve your knowledge. You're spending this time trying to sharpen your skill set because you don't want to rely on other people. You want to do this for you. And so that's why I'm going to be here every day, 12 p.m. Central Standard Time, Monday through Friday, and sometimes on the weekends. I think I'll have a stream tomorrow morning. Sunday, I've got to kind of bounce it. I'm head coach of my son's football team, or baseball team, excuse me. I will be a football also, but football's not going on right now. So on the weekends, I got to bounce around games and stuff like that because Coach Daddy, that's my number one priority, man. And ladies, that's my number one priority. But we will be back tomorrow. Like I said, if you happen to be looking for an exchange, Blowfin has been great to me. If they're available where you are at, there will be a link down below. Like I said, they have been wonderful for me. I was super appreciative of Mr. Pompliano for coming on my stream, or coming on my channel, not my stream, but coming on my channel. And make sure you follow us over on X. I try to keep you updated, whether that's, you know, what happened with PPI coming in this morning. Like I said, not just the raw data. Anybody can just paste the wrong data in there, but I like to evaluate the data and tell you exactly why things are down, exactly why numbers looked at the way they do. Because, you know, it's hard to make sense of a lot of these numbers, and that's just the honest truth. But guys, I appreciate every single one of you. Like I said, we're getting more and more people in here every day. I'm extremely, extremely grateful, extremely appreciative of every single one of you. I love you all. We will see y'all Monday morning, or Monday, 12 p.m. Central Standard Time, and I will see y'all in the morning, whoever's available to make it. I love it. Thank you.